G'day everyone, welcome back to Pete's Investing. In this strategy edition, we'll be talking about how a few of our strategies are performing in the current share market downturn. We'll compare the EMA9 and the moving average 20 strategy versus the CCI350 Commodity Channel Index 350 trading strategy. And we'll be applying a percentage gain and an average down approach on both. But first, the legal stuff. We're not offering financial advice, but rather it's an educational series to help you make better trading decisions. Okay, first I want to explain the two strategies. This is the logic for each one. So for the CCI350 on the entry, I apply a moving average 20 on the CCI350. So whenever that moving average 20 of that CCI350 breaks above zero, or breaks above minus 200, or breaks above minus 100, or breaks above 100, we enter a trade. And what that looks like is like this. So looking at this point here, this is the CCI350, the green line. The dark blue line is moving average of that CCI350. Again, the detailed description of this strategy is in the description below, so I'm not going to belabor this too much. So we enter the trade there when it breaks above zero, and we exit when it reaches at least a 5% gain. We average down when the CCI350 breaks above, in this case, the plus 100. Price goes against us, and we average down again when that CCI350 breaks above the zero when it did there, but then it drops suddenly afterwards. So we enter another lot of shares there. Moving average strategy is where the exponential moving average 9 crosses above the moving average 20. That's when you enter the trade, and you exit when at least a 5% gain is made and the EMA9 crosses under the moving average 20. So again, looking at a chart as an example, let's look at it back here. You can see here the moving average, exponential moving average 9 breaks above the moving average 20. The red line breaks above the blue line. We enter the trade. We exit when at least a 5% gain is reached, and the moving average, exponential moving average 9 breaks below the moving average 20. We average down. The entry parameters is the same, but we average down when at least a 5% reduction is made. In this case, we enter one lot of shares there, then another 5% drop is made there before we enter another lot. Goes up, didn't break above our minimal gain for that exit. We enter another lot of shares there. And then finally we enter 1, 2, 3, 4 lots of shares there before it exits with a profit at that point. So again, refer to the description for the detailed videos of those two strategies. What I want to show you now is highlighted here are the two strategies and the results back tested on these 8 stocks. Now these 8 stocks I'm not suggesting you buy. These are just some stocks I've chosen, some blue chip stocks. Again, remember the rules. I'm going to go through the rules a bit later on as well. But there must be blue chip stocks to trade. So these are the 8 stocks we're testing against, the back testing. And we go back as far as 2007 to take into account the GFC downgrade back in the market back then, but also more recently in 2020 with the COVID downturn. So you can see here the first table. Again, just focus on these 2 yellow columns for the moment. I'll explain some of these others in a minute. So we're backtesting the CCI350 versus the EMA9 MA20 strategy. So again, we're testing against these stocks, these 8 stocks. This first table is the profitability of each one in that period since 2007. This second table down here shows the drawdown of each. And again, just understand what the drawdown means. If you look at the history back here for this is BHP. The highest point of profitability down to the lowest point is the drawdown. So that happens once only during that whole cycle. So that's the most you would have drawn down on your accounts had you traded that since 2007. So what it's saying is since 2007 for BHP, you would have made an income of, using the CCI350 strategy, you would have made it roughly $3,915 with a drawdown of 27.24. And this last table down here shows the percent over drawdown percentage, profit over drawdown percentage. So that's basically 144%, which is simply 3,915 divided by 27.24, it's 144. So I've done the same thing for the EMA9 MA20 strategy. I plugged in all the backtesting results for the profitability as well as their drawdowns respectively, and given me a summary total. And then percentage profit over drawdown for each one. It gives me a total result here, and on average, and I'll rank them all. Now you'll notice the ranking. The CCI350 ranked 4th in all the strategies I've tested so far, and the EMA9 MA20 strategy ranked 11th percentage profit over drawdown. But I want you to notice one thing, and that's why I'm demonstrating this table. I know it's a bit busy, but I want you to understand this. The EMA9 MA20 strategy, in terms of profitability, ranked 1st. That's because for those 8 stocks tested, the sum result was $245,000, or just under $246,000. So it ranked 1st. The CCI350 scored 26,087. So it ranked 15th in terms of profitability. But you'll notice in terms of drawdown, had you traded all those 8 stocks since 2007, the drawdown would have been 390,000 total. Now, it doesn't mean you would have been down 390,000 in the same period necessarily, but that would have been the biggest drawdown of all those stocks combined. Remember, when we're saying the drawdown, we're talking about the highest point of profitability to the lowest. So that was from BHP. But overall, in terms of the ranking, percentage over drawdown, the CCI350 ranked 4th, and the EMA9 ranked 11th. So why am I showing you that specifically for those two and not for these other ones? And I can talk about those in another video. And I have, by the way, posted those videos for the alligator strategy. I've posted those videos in the past. If you look those up in my playlist in the channel, you can find those as a reference. But why am I showing you these two particularly? Well, although this is the highest profitability, 245 versus 26,000, I just want to make you aware that if you look at these two strategies, and let's go through these charts specifically. So again, this is BHP. You'll notice there you would have been in since 2007, opening back here around 2011. You would have held that for quite a few years. The EMA9 versus moving average 20 strategy versus the CCI350. In other words, there's more exposure to a downside on the moving average strategy versus the CCI350 strategy. Let's look at another chart on our selection, Caterpillar. What I want you to also focus on is, well, the chart pattern and how it affects our profitability for each one. Again, a lot fewer exposure in terms of number of shares we buy. This one had more exposure. So the more steps you see, the more number of shares we bought. So again, higher exposure, but at the same time, higher profitability. This one reaped in $3,500. This one's ripped in so far $15,900. So higher profitability, but also higher exposure. Commonwealth Bank of Australia. Again, a few trades made. Rewards of profits of 2,800. This one brought in 10,400. So I can see the pattern, obviously. This one brings in higher profitability. This one brought in $2,000 over the period. This one brought in 7,800. So again, I don't want to belabor the point too much, but I just want to show you again. This one brought in overall 245 versus 26,000 in terms of profitability, but this one is exposed to only 17,000 drawdown. This one exposed to 390,000 drawdown. So basically what I'm trying to say is the more times you expose and into the market in terms of averaging down, the higher the exposure. So in summary, what we look at is a high profit over drawdown percentage. So the higher the percentage, the better. So this alligator strategy scored the highest, but what we want to look for is a relatively high income for those stocks tested and a relatively low drawdown. So even though that scored number 1, I'll give you a bit of a hint here. The Stochastic strategy, which I put out a video sometime recently, and that's in the description below as well, the full video on this one. That's got a profitability of 193 with a drawdown of 144. So it's got a pretty high profit over drawdown value of 189%. So it scored 5th overall. So you can see there that the percentage is a bit lower than the CCI350, but you'll notice the profitability is a lot higher. So you're getting a better return for that strategy. Or if you want to go look at the alligator strategies, they also did quite well. 80,000 profitability, a 60,000 drawdown, and a 307% profit over drawdown percentage. Here are some of my investing rules. Buy proven blue chip stocks only, avoid speculative stocks. This ensures the probability of the shares of the company you're buying has had a good track record and more likely potential of future growth. Buy stocks which pay dividends. Do a quick search of the stock before buying to ensure it recently paid a dividend or is about to. This is a good indicator that the company has future potential of growth. If the company recently stopped paying dividends, it may be a sign that their growth potential may be challenged. Don't short positions, go long only. If you short up an instrument which pays a dividend, you'll end up paying that dividend to someone else who went long on the same instrument. Do not trade on news. Price is already factored in the share price. If you read an article in the finance pages which talks about an event on the stock you're considering, the chances are it has already been factored in the share price. So you've missed that boat. I did a video in September 2021 titled Uranium Stock Too Late to Trade, which demonstrates the effect that news has or hasn't and the share price action. Suggest you watch that video to get a better understanding. If you want to support my channel, go to the Patreon site and type in Pete's Investing. And support the channel. The link is in the description below. I can talk to you there with any questions you may have. I'd really appreciate any support to help grow the channel. Thanks for watching, guys. Don't forget to click the subscribe button, the like button, and the notification bell to get all the updates to the channel. Happy investing and see you in the next video.